Very cool, Daryl. Hey guys, this is John, and I'm going to hand this off here to Bruce here shortly. But I thought it'd be interesting is because we've got a couple of things that have come up in this current market, and a lot of questions that came up today in the room. And as we were looking for things to do, it's like there really wasn't a lot to do, and started looking at some iron condors on Google and some other things, and I think one of the things to realize is that the markets ebb and flow. The markets change. Sometimes it's time to do directional trades. Other times it's more income trade focused. And when the income trades pop up, I'm kind of Skyping Bruce, like, hey, what are you looking at? I mean, there's some basic things that I'll do, but Bruce is kind of like the maestro or master composer in terms of, looking at all these different things and piecing together these trades that I never would have thought of before, and they're great for bringing in consistent income. And it's important to realize not only in terms of just working with this current market and as it changes, because it will, but also in your own investments if you do have money in mutual funds and stuff like that too. So what we're going to do tonight is just I'll turn this over to Bruce, and as he gets started, I'll also kind of jump in and just show some different examples and things that I've been looking at. And then also just kind of some food for thought, toward the end as well. All right. So that's what we got. I'm looking forward to it. And Bruce, I'll turn this over to you and have a lot of fun.
All right. Thanks a lot, John. I appreciate that. And I hope everybody's doing great tonight. This is an encore presentation of the class we had last week. And we started talking about this a little while back, and actually, I'll get into the presentation here, and I'll kind of tell you how this came up. So first of all, always have to have a disclaimer. Options, you can lose money trading options. Everybody knows that. So I'll give you a real quick background on how this started. One of the guys that work here asked me he was telling me about his mother that had an IRA, and she had been invested, and it was a decent-sized IRA, and she had been invested in for 3 years, hadn't really made any money. And I mean, literally, the account value was about the same for 3 years. And I said, well, how is that possible? The market's been going straight up for 3 years. And he said, I don't know. Let's look at her statement. Talked to her mother. Her mother couldn't find the statements. You know how that goes. Because most people never look at their statements, and they don't know what they're invested in and so forth. So that's what prompted this conversation about 3 months ago probably. So I put together this class to talk about your nest egg, because we have different accounts for different reasons. Most people have an IRA, 401k, something for retirement, and then you have maybe other accounts for other purposes. But if you've been trading for any length of time, you went through, I'll start back to a little bit further back, the dot-com crash, the housing crash. Everybody remembers that in 2008, 9/11, of course, the flash crash, and so on and so on and so on. We all know this, but the point is, or the thing that we all know painfully from experience, is that if you have a nest egg type account and it gets cut in half, like pretty much everyone's did in 2008, it might take you 5, 6, 7 years just to get back to where you were. And, I've seen that happen to a lot of people, and I'm trying to help people, not have that happen again. And I certainly don't want it to happen to myself. So obviously we have to be proactive here, and that's what started this whole conversation and this whole class, actually. And I think it's great to kind of get the word out and have people really think about this, because most people don't. It's on cruise control. You don't really think about it. It's kind of tucked away. That's my safe money. But is it really safe, right? So what I want to do is to help you maybe look at it in a different way, maybe take a little more control, definitely get some peace of mind, to help you in your decisions. So let me give you a quick background for you guys that don't know or have never traded with me before, or been with Simple Options before. I started trading. I've been trading professionally for 28 years. On the retail side and the institutional side, I started on a bond desk, my first job, and traded municipal bonds. I traded government bonds, all kind of crazy government. I traded zeros and strips and cougars and tigers and all these kind of weird bonds on a bond desk on the institutional side. And then I started trading equities, so forth. And I've worked at a couple of brokerage firms, a couple of banks, managed a portfolio, a pretty substantial portfolio for a while. And it's been great. But through all those years, I've learned a whole lot about what goes on behind the scenes, obviously. And it's kind of funny. They say I'm an insider now, and I don't really feel like an insider because I never felt you see all this stuff. You guys seen Wolf of Wall Street and all that kind of stuff, and I never saw that stuff. And I know it went on, but anyway, in my 28 years of trading, professionally, I've learned a lot, and I want to help you guys as much as I can. So I put this class together. Primarily, we're talking about, again, nest egg money. To take a different perspective of it. And again, here are the questions to ask yourself. Are you making any money on mutual funds? Do you really know if you're making any money? How often do you look at it? Most people don't. They can't even find the statements. Or now one of the little tricks is, you get the e-document delivery, which nobody ever opens up, right? So you don't get the paper statement for the most part in the mail anymore. So nobody ever goes online to look, so you don't really know if you're making money or not, and you certainly don't look at the prospectus and all that stuff that you get online. But that it's critical to know this stuff, and it amazes me over the years how many people don't pick it apart and look. So fast forward to now, how are you feeling about the market lately? And everybody's pretty euphoric, I guess that's the best word. I read a couple of days ago that the NASDAQ has, it's only May, but we've hit 30 new all-time highs in the NASDAQ since January 1. So, we all know that. Market's been straight up since, 6 months ago. But are you making money in this market? Some people are, some people aren't. The other thing too, very important, if you're trading, are you losing any sleep at night over your investments, or do you have investments that bother you? You're losing money or not. Kind of goes back to, do you have a plan with your money, or are you just kind of, throw it on the wall and see what sticks kind of thing? Most people, unfortunately, I've always read this, that most people spend more time planning their summer vacation than they do planning their retirement. And I really do believe that's true. But so if you use a plan, have a plan, use it, obviously. Last week's class, I dove pretty deep into looking at a prospectus and looking at all of the fees that aren't included in the total expense ratios and all that kind of stuff. And you could go on and on for days about that. We all know that. The thing to take away from that is that nobody's going to manage money for free. Nobody wants to work for free. It is expensive. The more, especially if you start adding international and things like that, the costs, transaction costs go up. In a fast market, turnover costs go up, things like that. So there are a lot of fees embedded that you don't necessarily, that come after the fact. So no matter what style or of a fund or managed portfolio, whether it's a mutual fund, an ETF, everybody, I hear all the time, well, just buy the Vanguard 500, it's free. Well, it's not really free. It's also not managed. So you have active management, passive management, etc. Not necessarily one is good, one is bad, but, so I try to put everything in this sphere of mutual. I'm calling them all mutual funds, but I'm including unit investment trusts and all these other kind of managed portfolios that people use for their serious money, their nest egg type money, right? So my goal for tonight is that by the end of this class, you're going to know how maybe a better way or something, a new perspective that you haven't thought about to take control of your financial future. And I'm going to show you how you can generate steady monthly income and how I do it. And honestly, it's not that difficult. So let's get started here. I want to just, kind of, I don't want to go too deep into mutual funds, but if you look at general mutual fund prospectus, you will see that, as an example, in the return and fee scenario, typically they will quote an annual return of 5%. It's pretty standard. And what you will see, and I'll show you in just a second, is that over time that's really pretty true, right? And that's gross, right? So if you, whatever managed account you have has an expense ratio of 1.5%, which is probably a little high in today's market. The fees across the board have been coming down over the last probably 5, 6, 7 years, a little. And when I'm talking about coming down a little, I'm talking about 3, 4 basis points a year, 4, 5, 6 basis points a year. But they are coming down, right? But that's 30% of your gross is taken by fees, right? So I ask the question, do you really know your gross return? Do you know your net return? Do you know your expenses on your investments? And if you're talking about, seriously think about it. If you're talking about your, this is my safe money, my nest egg, this is my retirement. This is, most people have, 10 times more in their retirement, their safe money, than they do in their trading money, because I hear it and I hate to, when people say this is my play money, there is no play money, but you get the point. You can differentiate different kind of accounts for different purposes. But let's go a little bit deeper here. Let's look at returns. This is for, I think this is American Funds Investment Company of America, which is one of the largest funds out there. I actually like it. I actually like American Funds. They have some really good funds. This one in particular, maybe it has been around. I want to say it was started in 1973, I think. So they've been around forever. So let's look at this real quick, and I'll show you. This is Class A. Okay, right here, the results do not include sales charge, et cetera, blah, blah, blah. But before taxes, or after taxes and after taxes here, 1 year, 5 year, 10 years. So you're around, presto, you're around 5%. That's what they quote in the prospectus. As most do on a longer term basis. Now you will see funds, and I'll get emails from people saying, this fund does 27% a year, and if I look at it, it's got a 2-year track record. Well, of course, they owned a bunch of, Tesla or whatever. You get the point. But other thing I wanted to point out to you, this is, where's the date on here? This is a 2017, came out of a 2017 like March prospectus. But anyway, 10 years on the S&P 500, right? 6.95. And again, notice 1 year, 5 year. This is pretty strong, but we know we've been in a 7-year bull market, right? So the point is, this is more typical of the longer term returns. Single digits, maybe high single digits. That's great, on a longer term basis. I know we've all gotten accustomed to, making a lot more than that, and that's, we're all always trying to make more. But the truth is, and the reality is, over a period of time, that you're going to gravitate to lower and lower returns over time, right? It's just the two factors. One, it's a factor of the way the market, the ebb and flow of the market. But two, it is very, very hard. The longer you're invested in a managed account of any type, it's harder to keep that return high, because you will have a down year, no matter what anybody tells you. You're going to have a down year here or there, which will knock that return down over time, right? We all know that. So let's look at one other place here. This is a Dalbar study. It was done in 2015. And so this kind of makes the point here. This is the average equity fund investor return. 1 year, 3 year, 5 year, 10 year, 20 year, 30 year. Guess what? 30 years. That's not looking so good, is it? The reason I'm pointing out these longer time frames is, for most of us, we're still looking at 10, 20, maybe 30 years to retirement. You need to be getting more than this if you want to have a comfortable lifestyle, right? Or have any money, to retire on. So 20-year number, 5%. 10-year number, 5%. Notice the 3-year number, fantastic, because we're in a bull market, right? We have been for a while. And notice S&P 500, 20%. That's awesome. That's amazing. Even 5-year return, that's great. We have been in a 7-year bull market, straight up. So 20-year number, and the 30-year number, that's actually still pretty impressive right there, because most returns are going to be single digits. But my problem and my thought process, and one of the reasons that I really wanted to, to get the word out, talk to you guys know all this, but I want to bring it to the forefront, have you look at it. So where are we now? This is from 1950, right? And to 2016. This doesn't even have the 2017 move in it, right? This is to 2016. So are we priced to perfection? I don't know. People probably said that here and here and here and here and here. Oh, and it just kept going. Then we retraced. And then again, you caught the train and it rode and rode and rode. Oh, and then it retraced. And then we went up. Oh, this has got to end somewhere. And then we did a little retrace, and then we're off to the races again, right? So we're way up here. It says 2,200, and we're off the chart because we're at 2,400 now, right? Now, do not read into this that I'm bearish and I'm saying sell everything, the market's going to crash. That's not what I'm saying at all. I'm saying this is abnormal. For the last 7 years, we're in the longest, bull market, I think, on record. And if you look back over time, this is what's amazing. Check this out. So from 1964 to 1986, the market traded in a 500-point range. Now I know the Dow was only 1,000 back then, but the point is, look at this. So you mean to tell me that if you put money in the market here, and this is 1966, just bear with me on this example. You put money right here in 1966, and you said, you know what, I'm going to retire in 10 years in 1976. You've got exactly what you started with. Maybe you picked up a little bit from reinvesting dividends, right? Well, surely it's going to take off pretty soon. You actually didn't break out of that till 1986. I can't draw a straight line, but it's here, 1986, before you actually made any money, any forward movement, right? And here again, this is 1998 to 2010. We went sideways. You put money in here for retirement, you're at the same exact point here, right? I personally think we're going to get back in these kind of markets. I don't know when we could, here's the thing. A year from now, of course, I don't have a crystal ball. No one does, but I can promise you a year from now, we will look back and say, I can't believe, it's fill in the blank. I can't believe that we went 1,000 points higher, or I can't believe we're 2,000 points lower than we were this time last year. And I have no idea. And again, I'm not saying, beware or that kind of thing. I'm just saying that if we look at this, and this is straight off Yahoo Finance, you guys all know this, and this was at 2383, whatever. So it's about where we are now. This move is not normal, right? This will happen. Trust me, that will happen. I don't know how deep and how far and how long it lasts and all that kind of stuff. But the whole point is that in the scenario where we are right now, I think it makes sense to know the risks of the market, what could happen. We all know that. I don't want you to be the guy sitting around in 2009 that had a $200,000 portfolio for retirement in 2007, and in 2009 it's worth $75,000, and they're scratching their head like this lady in the on the screen is doing. If you know, I can say this: there is a much better likelihood that the market will not continue to go higher, then there, what's more likely? Would continue to go higher or will it pull back? Obviously, the more likely scenario is pull back. I don't know when. It could be a year from now. It could be 3 more years from now. I have no idea. I'm just saying, think about it, and think about it ahead of time. Don't wait till after it happens, right? So what's the alternative? There are only 2 choices. Pay someone to invest for you or do it yourself. I'm a fan of doing it myself. I've been on both sides of the table before. I traded on retail and I traded institutional. And so I'm on the same side of the table as you guys, as far as, and I'm trading total retail right now. So, what do we do? Well, the best thing you can do is to learn how to make money no matter which way the market goes. We want to make money if the market goes up, and the trend is up. I am fully, bullish, thinking it's going to continue to go higher. I just don't know how much longer and how higher it will go. But I can make money in an up market. I can make money in a down market. I can make money in a sideways market, right? So we want to explore these income strategies instead of relying on the bull market continuing. Because if my mother came up to me today and said, Bruce, I've got $100,000. This is my nest egg. I want to put it in the Vanguard 500 today. We're at 2,400. What do you think? I would say, no way, dude. Don't do it. Maybe we put 10% in, whatever, scale in, whatever, but if you are relying one way on the bull market to continue to grow your money, I don't think that's totally wise, right? Now, the thing to consider, again, is take control of your nest egg, right? So let's consider some of the vehicles. We talked a little bit about, the managed portfolios, and again, I'm not saying they're bad, but I'm just saying know what you have, know what you own, and know why you own it. So let's kind of switch gears. We'll talk about individual stocks. We talk about bonds. We talk about cash. Cash is an investment, actually. It's an asset class. And options, of course, my favorite. After all these years, probably for the last 20 years, I've probably traded options almost exclusively. I have some long stock, but it's maybe 5%, 10%, something maybe. It's not much. I trade mostly options. So again, I'm going to show you how that works. So let me give you a simple concept. Just, for argument's sake, let's say, we wish we could buy 1,000 shares of Google. And when I did this, it was $930 a share. So 1,000 shares, that's $930,000, right? Almost $1 million, right? Not a lot of people have that kind of pocket change, right? So what about Google options? Well, I could buy 10 contracts, which is equivalent to 1,000 shares. I still have control of 1,000 shares. And say those options cost $10 a piece. So it's $10,000 investment versus a $930,000. And I know it's apples and oranges, but it really can give you the same benefit of having the stock for just a fraction of the cost, right? So control the controllable. Maybe it's time to seriously consider taking a look at this and taking control of it. But what if you don't know what to trade, right? The easiest thing to do is start with the indexes. At this point in time, you have all the information you could ever want literally on your phone, your tablet, your iPad, whatever. Real time, I can, every night, honestly, before I go to bed, I'm laying in bed at, 11 o'clock at night or whatever, I open my phone, I'm looking at futures, or wake up at 4 o'clock in the morning, to use the bathroom, whatever. I'll check my phone, I'm looking at futures. I'll see what the European markets are doing, whatever. You get the point. The information's there to at least know what's going on with the S&P 500, the NASDAQ, the NDX, and the Russell, the RUT, which is Russell 2000. But say if, I don't want to trade the indexes, what about individual stocks? Just consider this. I always like to say, I think if I'm not mistaken, it was Warren Buffett that said, buy what you use or buy what you like or whatever. And I do believe the same thing. If you love Starbucks, you go through there every day, trade Starbucks. Learn about the company. Find out what's going on. If you like airplanes, buy Boeing. I just threw some things in here. Here's a great example. If your brother-in-law works at Home Depot, when you're sitting around at the barbecue, he tells you, man, the sales have never been better. It's great. Maybe you should buy some Home Depot, you know, that kind of thing. And if you know what's going on at Home Depot, you probably have a really easy way to find out what's going on at Lowe's, you know, pairs trade, right? Tesla, everybody shops on Amazon, etc. You know, bottom line, trade what you know, what you like, what you can get interested in. Really super easy to find out all this information, right? So when you decide, you know what, I stop at Cracker Barrel all the time, I want to trade some Cracker Barrel stock. What do? Okay, well, I'm new to options. Where do I start? You got to start with the basics. You got to start somewhere, right? So the safer way to do it is to start with calendar trades, butterfly trades, iron condor trades. These are the basics. These are the chassis of all other trades, right? So you kind of learn the core fundamental trades, and everything else builds around those, right? And you need to know the Greeks. And if you're new to options, I know we've got some people in here that are new to options. If you're new, don't let the terminology and the jargon, you know, don't let that throw you. It's just like learning to ride a bike. If you've never ridden a bike before, you're going to be scratching your head going, you know, which way do I sit on this thing? Same way with options. You will get it. It's not that hard, trust me. But as with anything, the more you learn, the more you earn, and that's so true with trading options. So who is the right person to be trading options, right? Well, one, you do need to have some level of interest in doing it, you know, for yourself. And what I mean by that, if you are a, I don't know, brain surgeon, you're an airline pilot, whatever, and during the day the last thing you want to do is watch the market. Yeah, you know, maybe managed account is the right way to go. Excuse me, I had a cough. But, you know, for most people, they can find enough time at least to read the headlines and know what's going on, right? So trading, and there is a gray area between trading and investing. I still consider what I do investing, although it's much shorter time frames. But it can be exciting. Things move around. You know, events happen, earnings happen, and you know, world events in North Korea and Greece and all this kind of stuff happens. You know, France. But it's, you know, I like boring trades that are not going to ruin my day if something unexpected happens, right? So the trades that I do are typically hands-off, right? They do typically allow you to have more time away from the computer. You know, if you have hobbies or you're retired or whatever, you know, these can be great trades for you. They are they can be lower stress trades than your traditional trading. And I'm not talking about day trading or anything like that, right? So here's the $1,000,000 question. What account size do I need? I get this question all the time. How do I size my trades? What account size, you know, etc. And again, for the purposes of this class, I'm talking about just the concept of, you know, everyone has some safe money. And I'm not saying take your entire nest egg and start trading it, especially until you learn the ropes, right? It's like anything else. You're not going to, you know, you're not going to read a book or two on golf and go out and beat Tiger Woods on the golf course. You're just not going to do it, right? You got to go out there and hit 10,000 balls before you know, or get up to that level, right? It's the same way with trading. You can't start day one. But that being said, the good news is it's easy. It is really, it's very straightforward. Let me put it that way. So what I'm suggesting is take a portion and learn how to make money with it, and then add a little more, and add a little more, and add a little more until you get comfortable, right? As with any type trading, you know, bigger is better. It's easier. It's actually, percentage-wise, you can make a lot more money on a smaller account, and because it's the whole, you know, turning a battleship is a lot harder than turning a ski boat type thing, you know. And I have a number of accounts, a lot of different accounts, different sizes, and they're for different purposes, right? So I wanted to show you guys, and I was a little reluctant to do this, but I'm going to show you some accounts of mine. Let's take a look, and I'll show you. So first of all, past performance is no guarantee of future results. I've got to put all kinds of disclaimers on this. I'm showing you my experience, what I do, what I have done. This is year to date. on my account. So let's start with this one. This is a tiny account. I hear people all the time, I don't have enough to trade. This account started the year at $3,400, right? Has anybody here got $3,400? I think you probably do. I've made $900 on it this year. It is worth $4,400. That is a, what is that, 27% return, something like that. And my biggest loss was $120. My biggest winner was $615, but however, this is the Russell, and I do like trading these indexes. This is not one trade. This is probably 2 or 3 little trades. Most in an account like this, if I make $150, $200 on a trade, and I'm talking in a $3,000 account, that's fine. You know, move on. I will tell you this, and everybody hears me say this all the time, that you will not take a $3,000 account and at the end of the year have $1 million. It just won't happen. No matter what you do, it's not going to happen. And I get the same emails that you guys get that say, I turned $500 into $500,000 in a week, and just delete that. That's not reality, right? It doesn't work like that. So let's take a look. This was a small account. I want to show you it doesn't matter what size account you have, right? So I've got another account here. Let's see. All right, this one, I started the year with 16,000, actually a little less than 16,000, 15,985 or something like that. I made $8,800 in it, and it's worth 24,000. So that is what? That's 55%. You know, and this is May, right? I traded this a couple times, and this, and you know, my biggest loss is less than $1,000, right? This is probably more typical of what size accounts people trade, right? And you can see the names I trade. You guys that are in bias with me or trade with me, you know these names. You know, I've traded, this is Restoration Horror. I traded that thing off and on many, many, many times. Allergan, Russell, Boeing, Bristol Myers, you know, et cetera, blah, 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 Ulta. So you guys, I'm trying to show you it doesn't matter what size account that you have. All right, here's a little bigger account that I have. I started this account with about 170 roughly, and I'm at $45,000 or 214 right now. That's what, 25%, something like that. And again, it's May. You know, I got a long way to go. So you can see the potential there. And, you know, some people might say, well, why don't you just go to cash? Just stop. You know, that's a good year. That's a solid year. 25% is pretty good, right? That's $45,000. You know, that's pretty good income, right? The reason is that with the strategies that I use, I don't care if the market goes up or down or sideways. It doesn't really matter. So I'm generally not going to get blindsided and, you know, and lose all this. And one thing I want you to look at, and you can go back and look at these, but very, very, very important here, I want you to do some, you know, soul searching here. Look at your own P&L. It should look like this. Okay, I trade the Russell. I actually did a pretty nice trade today in it, but that's this is a pretty good size account, and that's an average trade, $1,000, $2,000, right? So 11,000 or 6,000, 6,000, 5, 3, 3. These are not big. I didn't make all this on one trade. I didn't load up on Amazon and write it up and make, you know, all this on one trade. The biggest trade is biggest profit in one vehicle is $11,000, right? Look at it. This is what you want. 900, 900, 700, 600. Look, get all the way down here. How many losers do I have to winners, right? Here's my winners. What's my biggest loser? $6,000, right? And this is still an open position. I feel like I will make this back, or some of this, actually on the position I have right now. So you take this one out. On a $200,000 portfolio, my biggest loss is $1,600. I mean, again, take that one out. This is still active. This is a live position. I'm really actually not that worried about it. But anyway, you should look like this. Again, soul search, look at your own account. 55, 125, 200, 700. That's it. You know, if you have one trade that down here that's, you know, $28,000 loss or something, you're doing something wrong. It needs to, all my accounts, go back and look, they're all the same way. I don't have any one super big winner. I don't have any one super big loser. That is by design. Your portfolio should look like that. For if you want consistency and you want to sleep at night, that's the way to do it, right? And I am here to help you. It's not that hard. All right. I wanted to repeat this just because it really makes me nervous talking about performance in general, because compliance is so weird and all that kind of stuff. This is what I do. And, you know, there's no way to predict future returns. I'm not suggesting that, you know, don't extrapolate these numbers and say, well, if he keeps on doing that, he's going to make 150% in a year. Yeah, maybe. May make a lot more than that. May make less, you know. But I don't read too much into this. I'm just showing you what is possible with these type returns or these type strategies, right? I don't know you. I don't know how you trade. I don't know if you're a good trader, bad trader. If you're super aggressive, I'm not super aggressive. These returns will be a lot higher than this if I was more aggressive. I'm not. I take small wins and keep on going, right? But I said this before, I know you guys get these same emails. Beware of anybody that promises crazy numbers. We all get these emails, you know, I'm turned whatever into whatever. You know, that's, we here at Simpler Options, we try to be as completely transparent as possible. You will never see smoke and mirrors. None of this is hypothetical. We trade real money. A lot of the coaches or teachers or whatever you want to call them out on the internet, they don't actually trade real money. Everything, you know, is hypothetical. And if I had a hypothetical or trading paper account, I would be up 150% already this year, right? It's different. We trade real money here, right? And we show you there's no smoke and mirrors, right? So back to how we're going to do this. The options trades for incomes or income that I talked about. The calendars, the butterflies, the iron condors are the kind of foundation kind of trades, right? They're relatively easy to put on and take off, right? They can profit in up, down, sideways. That's the key to these things working, right? You will always know your max gain or your loss going into the trade. And again, if you guys have traded with me, especially in a live trading room, you always see me run this. I do this on every trade. I'll say, here's my risk, here's my reward. I may not get all, you know, here's my max loss, here's my max profit. You're going to be somewhere in the middle. You know, I don't ever take a total loss, and I don't ever get the max out of, you know, max profit out of a trade, because I typically tend to grab the low hanging fruit and run, right? And that is my way of hitting singles and doubles, right? Tend to be slow and steady. And you noticed it's the same on all of my accounts. You know, there's nothing, again, there's no giant winner and there's no giant loser. They're all singles and doubles, singles and doubles, singles and doubles. And it's funny because, you know, I'll make a trade. It doesn't matter what size account. I'll make a trade, and if I make $250, I'm like high-fiving the guys at the water cooler. I'm like, hey, you know what? That's enough to buy a nice steak dinner and a bottle of wine. That was pretty cool. And, you know, it didn't give me any stress. I don't have an ulcer, you know, and I'm happy. So those add up. You do one of those a day, well, you know, you're starting to turn into a little money, right? You do $500, you know, a week on a consistent basis, $2,000 a month. It's $24,000 a year. You know, that's not chump change to do something on the side that doesn't give you a lot of pain, right, or stress. So let's recap. So we talked about, you know, the advantage of why you might want to do this. The best thing to me, up, down, sideways market, you know, consistent returns. You guys see the returns. I don't mind showing you that. Less stress, less time spent on trades. And they can complement your other accounts and give you more control of your investments. Again, I'm not saying, you know, take all your money and dump it in here and, you know, try to roll the dice. That's not how you do it. Honestly, it's not. But why is now a great time to use these trades? Well, any time will work on these strategies. And I will tell you this, again, my personal experience has been up market, down market, sideways market. It doesn't really matter. My percentage returns don't vary too much year in, year out. Now, you may hit some rough spots and have some bad trades or have a crazy market. Last year was kind of a crazy market. We had huge gaps, with Brexit and the election, all that kind of stuff. But, you're going to have those years, and that's all part of it. Again, slow and steady wins the race, and you just keep plugging along, right? Singles and doubles, singles and doubles. But the other thing, too, is that I honestly think that we may be setting up the stage. And again, I'm not saying I'm bearish at all. Don't read that into this. But I'm just saying at some point, I think we will get back into one of these prolonged kind of sideways. Maybe we go up and down and up and down and up and down. That's fine. We can make money we can make good money in those kind of markets, right? That's a better kind of market for this, what I'm talking about. But I think that might come into play at some point between today and the time you retire. Do you agree? I think we all agree. And when those happen, those sideways markets, we can be in those for years and years and years and years. I mean, you saw we went from 64 to 86, and then we went from 2000 to 2008, I think it was. So you get the point. And, think about this. If we continue to rally, there's going to be a reality check. You guys know the VIX hit a 23-year low the other day. We're in the 9s on the VIX. And that, to me, says too much complacency in the market, which is fine. It can keep going. That's great. I'm cheering it on. If it goes higher, that's great. I hope we get to 2,500. That's awesome. But reality will happen one day. We all know. Everybody's scratching their head going, if you look at this, things look a little extended. They look a lot extended, and we're at the very, very late stages of a bull market, right? So I'm just saying be careful. And I'm saying to seriously consider this ahead of when something might happen and be prepared for it, because you don't want, if something happens, you don't want to be trying to learn all this stuff after the fact, right? And now your account is down 30% because, somebody in North Korea shot a missile somewhere, or, some terrorist attack in Paris, or whatever happens. We've got Greece, we've got Italy coming up for a vote. We got all kinds of stuff, on the horizon. I'm just saying be careful out there, right? So up, down, sideways market, these strategies work. And I've been doing these for, again, I've been trading professionally for almost 30 years, and I've been using options almost exclusively for probably 20 years. I'll tell you a funny story. When I first started, it's funny now, I can literally trade. We're driving down the road, my wife's driving the car, and I'm in the passenger seat, and I'm trading from my phone, and we've all done this. Just open up your app and trade from your phone, your iPad. You're sitting at the beach, your toes in the sand, and you're doing trades, or at least looking at your accounts, whatever. In the old day, when I started, we had paper tickets. Literally, I would write, buy 1,000 shares, Walmart, whatever, and I walk them up to a wire operator, and she puts them in the little tube. And like in the bank, in the old days when you stick the little plastic thing in the tube and it sucks it up into the ceiling and goes over to someone that enters the order. And then we also had little mail slot bins. So I'd walk back up there about 10 minutes later, and they would put a paper ticket in my bin that said, you got filled at $53.28 or whatever. So from the time I decided I want to buy to the time I got a confirmation was 10 minutes, And now it's a tenth of a second on your phone while you're driving down the road going 60 miles an hour. Times have changed, right? So anyway, that's good for us. The more technology we have super, super great platforms to trade on. We have super liquid markets. We have fast execution. I mean, we've got cheap commissions, dirt cheap commissions now, actually. So things are good, right? For taking control of this yourself. So do you want my help? I'm going to do a step-by-step money management training class. I'm going to go over these trades, show you how to be profitable in different conditions. If you don't want to rely on the Wall Street money managers or a portfolio manager for you, or a financial advisor, or want to rely less or take a portion of some of your money, I encourage you to do it. Come to the class. You will learn a lot. We're going to talk about the foundation strategies. I'm going to give you very specific rules and guidelines. You will be able to refer back to it for years. And I'm going to give you time frames, explain when to use it, when to not use it, when to pass on a trade, how to use it. You will, from time to time, trades will go against you. Things will happen. And you will need to know how to defend or how to adjust your trades. And let me pause right there, because if someone gets discouraged doing this, step back a minute and think, okay, well, if I owned, I don't know, I'm just picking a stock. If I owned, 1,000 shares of whatever, Apple, Google, whatever, it doesn't matter, and the stock drops 10 points, and you see it on the nightly news, and you're like, well, that's not good, but you don't even think twice about it, right? But if you put that trade on yourself and it's an option trade and Google goes down or Apple or whatever the stock, you start beating yourself up like, it's my fault. Well, it's not. The trade didn't work. Most work, the vast majority work, some don't, and some you have to defend. So I will say that, don't expect it. This is not an ATM machine. Don't expect that. Don't ever expect that. And whether you have long stock, you own individual stocks, or you're doing option positions, the market goes up, the market goes down, you have good days, bad days, but the key is to be consistent over time, right? I'm going to show you how to do that. I'm going to show you what common mistakes to avoid, tips and tricks, how to fish for orders, how to save money on commission, how to set up the orders and get them filled, so forth. So I really think that it can help you. I mean, I've been doing this for 20, almost strictly options for 20 years and trading professionally for 30. So, I've done this a couple times, right? But I'm going to, we're going to go over in detail how they work, why they work, how to set them up correctly. And I'll show you the profit potential on the trades. I'll show you how to adjust them and defend them. And the main thing is just to be consistent. And here is what I mean by being consistent. What's your personal goal? Do you want to make, it's $250 a month. Is that okay? Sure, absolutely. It's $500 a month. That make your car payment. $1,000 a month. That make your car payment. $2,000 a month. That make your mortgage payment. That would it help? Sure, absolutely. How much are you willing to risk, and how much time are you willing to to devote? But you got to have a goal in mind. You got to have a plan, right? And what I want to do is help you set up a program that is lather, rinse, repeat. Do it over, do it over, do it over. And that is what I do, and you've seen my results. And again, I'm not promising you that you will get those. You may do a lot better than me. And, you may have a different style, or you're more aggressive or whatever. But I can show you how to find that out for yourself, right? So, the biggest thing people say, well, there's some trick to it, and I hear that, you can make money or you can lose money or whatever. There's no real trick to it. There's no magic to it. I am a normal guy. I'm just like everybody else, right? I don't walk on water. I learned these step by step just like everybody else. I paid hundreds of thousands of dollars to learn this, literally, through mistakes, but I've hired mentors myself. I still have mentors that, nobody will ever master this 1,000%. Just like John was saying at the intro, I learn stuff from John every day. He learns stuff from me. We all learn, we learn from Henry. We learn from Chris. We all learn from each other, because you will never, you'll never say, okay, I got it all. I don't need to learn anymore. It just doesn't happen, right? But that's the beauty of it. The more that you learn, the easier it is, and the more money you can make, and it's just so much better, right? So the key is knowing how to set up your trades and having a plan, and then know what to do with your plan if a trade gets in trouble, and if it doesn't, know when to take your profit and get out, and high five everybody and move on, right? So don't wait till it's too late. I'm telling you. Again, not calling a top here. Don't read that into this, but I'm just saying, at some point, we all know this. I'm not telling you anything that nobody knows. At some point, we're going to have one of these. And then, oh, that'll never happen again. Oh, yeah, it will. There it is. Oh, that'll never happen again. Yeah, oh, yeah, it will. There it is. It's coming. I don't know when. I'm not setting anything up bearish or anything like that. primarily because I really don't have to with these type trades. But if you have a managed portfolio that you are relying, if you're buying the S&P 500 here, relying on it to do this for the next 10 or 15 years until you retire, be careful. And when it goes the other way, think back to that voice in your head and said, you know what, Bruce told me this was a possibility. My 100,000 is now worth 50, and now it's going to take me 8 years to catch back up to where I was. Don't let that happen. I've seen that too many times. It's a real thing. You guys know it. They've been through it. We've all lived through it, right? So from an insider's perspective, do you want to let somebody else manage your money, or do you want to take control and let me help you learn how to do it, right? Remember, 3 ways versus 1, up, down, sideways, doesn't really matter. Or you're going to count on the bull market continuing to do what it's never done before, and that's to keep going up after 7 years. So with that, I'm going to get to, how do we do that, right? Well, this is it. So this is the class I'm doing on Saturday. And it says 12 to 4. We all know. I know a lot of you guys are taking classes with me for. We won't finish at 4. It's probably, we always go later. But that's a good thing. I will stick around. We'll answer questions, whatever, anything you guys want to do. But I would encourage you to do the live trading, because you really get, the live trading is interactive. We are talking back and forth, and you really, when you're setting these trades up in real time with the market open, you get a lot more out of it. This, in my opinion, I run a trade service called Bias, which I do all these trades in, and I do daily updates. We have a live trading room for you guys that don't know or haven't been in there. You get 3 months of Bias plus the live trading plus a strategy for $6.97. And I don't set these prices. I don't do anything on the marketing side, but one of the guys was going over this with me today, and we were looking at each other and like, this is really way too cheap. I mean, this is the cost of a new, a nice TV screen or a TV set, $697. That's pretty cheap. I paid a floor trader $6,000 one time to mentor me four times, and it was worth it. I learned some stuff, but this is cheap, people. This is cheap. You will learn a lot. You will really learn how they work. You'll get the experience of us trading together. And then if you do Bias, the elite package, I'm going to do this for we'll do it 3 months, every day for 3 months. And I'm in the live trading room. You can ask questions every day for 3 months if you need to learn it, right? For you guys in Bias that are already in there, let us know. I think they're going to give you, extend your Bias. You will get credit for that, put it that way. And also, I don't have it here in front of me. I actually forgot to put a slide in here. But for anyone that's not really up to speed, we have a course that's called, Henry Gambell and I did a course called Back to Basics, right? And that's starting from zero. What's a call, what's a put, how does it work, volatility, etc. It's a 4-part series, and you get that for free if you get if you sign up for this, right? Even if you're intermediate trader, that can help you. That we cover a whole lot of the basics. There's a lot to it. I'm going to cover some of that in the class, but if you need that, let us know. It will be yours for taking this. So
hey Bruce, you got a second?
Yeah, jump in.
Yeah, I was looking at the questions and things like that too, and one of the things that's again, it's interesting in this market that we're looking at is that everybody I talk to is just waiting, especially like in funds and things like that too. They're like, oh yeah, we're just waiting for the volatility to return. And Bruce said something pretty interesting there. It's like we could go sideways for years, and I don't know if you guys were trading in 2004, 2005. I started trading currencies then because the stock market was so quiet, like couldn't believe it. There was nothing to do. And back then I didn't sell premium. Like that was just not my forte. I was a directional trader. And so I had to find new markets to trade. And I left equities and went and started trading currencies and, more futures and things like that too. I am actually, it doesn't matter to me whether the market's up, down, or sideways. And when it's, when we've got situations where we can do pretty, good directional trades, great. But I mean, for quality of life, being able to make money week after week by selling premium is so much easier. Like directional trades, those are, they're fun, but they're stressful. Like you've got to be on top of it. It's like, okay, if it's getting up there, I've got to work my order. I got to get out of this thing. When you're selling premium, your life is so much easier. I mean, it's like you do all these different strategies. You don't have to worry about them. You don't have to stare at the charts. If it does start getting a little bit out of whack, you start doing some adjustments. And one of the things I've found is once people understand the way Bruce does this, there are times that, I've talked to people who are like, oh, I'm never going back to directional trading. I was losing my hair directional trading. It was so stressful. And when I'm doing it this way, it's like I'm getting a paycheck every week. And if you are either A, not familiar with these kind of strategies, you owe it to yourself to invest in your future and understand this stuff. I mean, this is priceless education. And if you've done a class with Bruce before and you've seen these materials before, I learn something new every time I listen to it, okay? And there's always nuances that you're going to pick up. And again, the whole idea and the reason that the classes are lower priced like this is that it represents a small investment. It represents one or two trades for you to actually recoup that investment. And that's anytime we do live classes, is that you're able to potentially make enough money during the class to pay for your education. So I've got my motto in life, and I found that once I adapted this, my life became a lot easier, and it's ABL, always be learning. And anytime that we figure out that we think that we know it all, and especially in trading, that's the very moment that the market's going to, rear back and pop you on in the kisser there. But the moment you have this kind of open mind, new, it's like beginner's mindset, always learning, the world changes, and it's just one of those opportunities where these are strategies you're unfamiliar with. It's a no-brainer. If you've done classes with Bruce before, it's just continuing to hone your skill and refine your edge. And I, for one, am very much looking forward to the class. It's going to be just in time for monthly expiration next week, which is going to be a lot of fun. So thank you, Bruce, for offering it. I'll turn this back over to you, but looking forward to the class.
All right. Thanks a lot, JC. I appreciate that. And I love the ABL. That is so true. I mean, I was looking for an acronym. That's great. I need to keep that in mind because I do. I learn stuff all the time. I continue to learn this stuff, And again, the more you learn, the easier it gets. And, you kind of I've seen when I'm in the trading room and I'm putting on trades and people are like, well, how did you know that? How did you see that? And it's like, well, I've done it a couple times, and you get to know it, but you got to know the basics first before you can get to that level, right? It's all part of it. So I know we've kind of gone about our time. I'm going to look down these questions real quick, and I will be glad to help you. David asks, as this is kind of funny, did you ever see what that person's mother invested her IRA in? That I honestly think she still got it where it has been and is still frustrated. So, yeah, and T. Calder 1, you are so right. And I know he's talking about like 2008 when everybody pretty much lost half, their portfolio. If you lose 50%, you need to make 100% return just to get back to even. That just boggles my mind, right? And it's true. And I saw so many people. It's funny because when you're in the business, people for whatever reason, when you're at at the cookout or cocktail party, whatever, people are always asking you, oh, I bought this stock or that stock. What do you think? Well, after 2008, it was it was more of, what am I going to do? I lost $40,000. I lost $500,000. That kind of thing. One guy, a friend of mine, and he had about $1 million. And he went down to $400,000, and he had managed accounts, and he's pretty aggressive. And he said, and I remember it clear as day. He was about 65, and it was early 2008, January, or 2009. I'm sorry. What do I do? What do I do? And I said, believe it or not, don't do anything. Just write it out. Keep it in there. And he didn't. He cashed out and went to cash about a month right before the turn happened. It happened in March 2009, and we've been pretty much straight up ever since then. And that 400 would probably be worth $3 million by now, but he couldn't stand the heat, and that's why I'm saying you think about this ahead of time, because it will come again at some point, and if it doesn't, that's great. I will be so happy if it never comes, but it will. And the best thing is if we got just chop sideways back and forth and never have the big giant massive correction, because that's ideal for this type things we're talking about, right? Let's see. Toshiba, no, I don't. The question is, do you manage other people's money now? I do not. It's kind of funny, John and I, that's how we met and started talking initially. I had a guy that wanted to give me $5 million and wanted to start a hedge fund. And I said, you know what? Let me talk to my buddy John and see if he's interested. And we talked, and we told the guy we wanted $20 million, and he didn't want to do it. And so we never started the fund. But it's a funny side story. But anyway, no, I don't manage now for anybody else. Let's see. HM, do you trade futures? I do a little bit. I have a side future account, but that's more for hedging. You can trade futures pre-market and aftermarket in the middle of the night, all that kind of stuff. If something were to get squirrely, I would probably jump in and do something on the futures side. Let's see. Marcus says I'm in Australia. Let's see. I work most of much time to trade at night. Marcus, it honestly doesn't. It can. I will say this. It can require as little or as much time as you want to put into it. And what I mean by that is I typically will only have about 6 to 10, maybe 12 trades on at any one time. Some people want to have 25 trades on. Some people have 1 or 2. So you can have fewer trades and maybe a little bit less risky parameters, and you really would not have a lot of time commitment involved there, right? And you could check it at at the I know you don't want to get up in the middle of the night, but you could check it at whenever you get up the next day or whatever. So let's see. Questions: how do you limit your loss on options trade? Basically, you have a line in the sand as far as a loss on a trade, and you pull the plug, or if it is a defendable position, and we're going to get into that this weekend, if it is a defendable position and I still like the stock, I will stay in it and defend the trade, right? If the setup is blown and I don't like the reason that I got in the trade in the first place, I'm out. Pull the plug. If I have a $500 loss, I'm out. Or whatever your number is. Your number may be $100, maybe $5,000. But if the setup goes bad and I don't like it, I'm out. If I can defend it, I'll stay in and try to defend it. Okay. HM. Yes, those trades I showed you are exactly bias type trades. Typically, even in the larger account, I will do 10 contracts, maybe 20. Nothing large. I don't put that much size on. The largest size I have on right now, and I think it's probably the largest size. Well, it's the largest size I've had on for a couple months. I got 40 contracts on one trade right now. But that whole position is only $20,000 or something, and that's in that large account. Let's see. Karen, I do have rules on managing trades, and the hardest thing to do is to stick to your rules. I bend the rules sometimes. Sometimes you can't help it because of a gap situation, stock goes up or down, whatever. But yes, I have very, very hard rules, and one is price of the stock or price of the option or price of the trade setup parameters, and then a P&L parameter. So I have 2 or 3 different red lights that flash when it's time to do something, right? Let's see. Rick said, hypothetical, 300 active accounts, 600 other. Well, good way to protect this other cash bonds, aggressive, modest fund, or with 900 active. Rick, great question. I would not have any problem putting all of it in a trading account, right? That being said, I never have more than probably about 60% of my money invested, so I'm always about 40% cash. So I don't have 100% risk on all the money, right? That being said, also, I've got a lot of experience. I have comfort level, blah, blah, blah. If you did it, if you put 300 in a trade account, 600 in another account, if it's a taxable account, cash, some bonds, some managed funds. I have nothing against managed funds. I sound like I'm beating them up. I'm not. They do work. It is worth paying people to have, an actively managed portfolio. I'm just saying, don't rely on the performance for the last year, or, 1 to 7 years, because I don't know that continues for another 7 years, or fill in the blank, however long you have to go to retire, right? That's all I'm saying. But the other thing too on your question is, you have to have a comfort level. If you can't sleep at night with having all your money in a trading account, that's just me personally. And if I had 900,000 in a trading account and that was all my money, I would be inclined to take a lot less risk, put it that way. I would never put more than, on a $900,000 account, I probably would, the most I would ever have invested at any one time was probably 500. And of that 500, I would do some pretty conservative stuff with some pretty conservative stocks. I'm not trading Tesla and, Priceline, went down $100 a day. That's probably not going to be my, trade in an account like that, probably. All right, let's see. Gord, if you have a butterfly and an iron condor and the market suddenly has serious pullback, is likely these will be losing trades. It's likely the iron condor would be for the butterfly, probably. They're both negative Vega trades, which we're not going to benefit from a down market. A calendar would. That's kind of why you need to mix and match these, and that's kind of part of the course, is how to mix and match these things. And it depends on where you are in the trade as far as what strikes and if you're bullish or bearish and that kind of thing. All right, let's see. Yeah, the other thing too on Karen, I'm reading about your the Black Swan question. Think about this. One way to instead of trying to buy a bunch of puts for a Black Swan event, you can have fewer positions on, you can have more cash, and that is your shock absorber. Now, there's a difference in being defensive, and there's a difference in taking advantage of, you buy a bunch of puts and the market goes down 1,000 points, you're going to retire quite a few years earlier, right? But if you're just trying to protect what you have, that's a whole different ballgame. Cash, collars on stock and all that kind of stuff can really do that job for you pretty easily. Fam says, are you able to defend and adjust all your trades to be profitable? In most cases, yes. Most trades will not need adjusting or defending. And in most cases, if I have to defend or adjust, in most cases, I can pull them out and at least either be profitable or have less loss. And what I mean by that, and you guys know this, you've been in bias with me before, if we have a trade that goes against us and we have a $2,000 loss, for example, I'm just picking a number, and we can defend it, and we end up at the end of the trade with only a $400 loss, I have saved $1,600, right? That's okay with me. I don't care how many times I have to defend it if I can turn a loser into a not so bad of a loser, or turn it around and make $100 on it. That's great. I turn a loser into a winner. So it depends. It depends on the position and so forth. Frank, absolutely. The question is, can these be done in an IRA? Absolutely. Sure, no problem at all. Let's see. HM, the question is, do you discuss principles portfolio management? I discuss more trade management than overall. We do, absolutely, we'll talk about that, but that's not going to be the focus because everybody's portfolio is different. Everybody's aggressive levels, conservative levels different. Everybody's cash levels different and so forth. But I'm going to outline absolutely how sizing portfolios and so forth. Karen, I am in the live trading room. The schedule is about to change, so I'm in the Simpler Options live trading room on Tuesdays and Thursdays at 1, and I am in my live trading room every day. And we're going to set a schedule on that probably within the next week. Kevin, hey, good to see you. Let's see. Based on previous classes, found that live trading use pays for it. Yeah, we've actually. It's actually been. I hate to, there are no guarantees. We can't. Obviously we can't guarantee that we have good trades. There's been very few classes that we didn't have some pretty successful trades. Bill says, Tony Robbins says, Kane. I like that. Constant and never-ending improvement. Yeah, I like that. That's good. I'll have to use that one too. So I know we're kind of gone over time here. Stu says, what do you do differently in those counts and bias there? Honestly, the vast majority of it is just like bias. There's not really anything I'm doing tremendously different than bias, really. There's really not. Joey says this is too advanced. This class too advanced for me? I do not. Put it this way, if you want to trade options, at some point in the future, next week, next month, next year, you got to start somewhere. You got to learn. I would encourage you to take it and get the back to basics, and then you've got from ground zero all the way, from start all the way up to speed. And think about this. You probably, if you're brand new to options, a lot of this may be, over your head or whatever. It really won't, because it's nothing that complicated. Nothing about this is that complicated. But it's new material. You have to learn it. Read it. It's all on video. We're live trading. You can ask questions, that kind of thing. And I promise you, after you go over it, maybe a handful of times, it'll start to soak in, and then things will start to make sense, and light bulbs will start to go off, and you go, oh, I get it now. I get it now. But you got to start somewhere. So this is about as the back to basics is about as basic as you can get. This class is not a basic class, but it covers the basic trades that you will need to learn if you want to trade options, right? It's not an advanced class, but I think it'll definitely help you. And if it doesn't help you on the first go-around, it'll help you on the second or the third go-around. And I honestly used to watch videos over and over and over and talk to people and have mentors. And a lot of these mentors I had to pay and ask them questions, and I can't get them on the phone, and they're trading, and we're shooting emails back and forth just to try to get a question answer. I'm telling you, live trading and having a mentor, or in bias, you can talk to everybody else in the chat room, and they can help you as much as I can. We're all trading together as a team, so we're all on the same page. All right. Fam, great question. Do you trade same stocks over and over? Yes, I like to trade. You saw from my P&L, there's not that many stocks in there, right? Even that big account only had, 15 stocks maybe, something like that. I tend to trade the same stocks over and over again. Because you get familiar with it. Like I said, if you go to Starbucks every day, right, and you're used to sitting in line for 15 minutes, and then all of a sudden you start getting there and there's nobody there. The store's empty. Uh-oh. Well, maybe something's going on with the stock that you need to be aware of. I'm just total hypothetical right off the top of my head. But But yeah, I trade the same stocks over and over and over because you tend to get the feel for how they trade and their movements and so forth. And you tend to keep up with the news on them a lot more, right? Let's see. Toshiba. Could I recommend somebody with good record? I probably could. I've got a lot of buddies still in the industry. Most of my buddies are institutional guys, though. They don't really manage for individuals. But yeah, I absolutely have some people I could help you with if you want to, if you want to have that conversation, absolutely. You can actually email me or email support at Simpler Trading, or you can email me, Bruce, at Simpler Trading. I'll be glad to help you. G Cruise, a program primarily based on selling premium primarily. Yeah. Let me back up. Selling premiums, iron condors, right, and credit spreads, things like that. A butterfly or a calendar to me is not selling. You're buying premium when you do those trades, and that's 2/3 of the type trades we're going to talk about, right? Jim, great question. So with 60% invested, I'm still earning 25% on the total account value. Yes, absolutely. Again, that tells you the power of the of how much it works, because if I would have had 100% of that money working, the returns would be a lot more. And again, I'm not an aggressive trader. That's pretty kind of middle of the road trades that I do. And those returns, again, you can do the math, and I'm not promising anything to anybody as far as performance, but that's pretty typical. That's nothing earth-shattering, put it that way. I do know some institutional guys, and I'm on the low end of the spectrum here, doing the retail trading like this, but I know some of the institutional guys that, would make, thousands of percent back in the day. It's a little harder now for those institutional guys because, the way trading works, but for institutional guys, because it used to have, $5 wide spreads for indexes and things. But anyway, whole nother topic. But so, all right. Karen, the bias trading room is open all day. I will probably go in there. I'll probably be in there live for at least an hour a day. The room's open. There's always people in there talking, so you can ask anybody questions as well as me. I try to have all of my trades done by about 10 o'clock in the morning every day, 10 o'clock Central. But I'm always popping back in there, and I'm going from one room to the other. I'm in this live, the Simpler Trading room. Mine's kind of a side room, just for bias subscribers, right? Baron, what brokers do you recommend? I like Thinkorswim. It's a big one. One of the main reasons I've been there for the longest. I've been there well more than 10 years. I am very interested in Tastyworks, the new platform. Commissions are very cheap. It looks very good. I don't have an account there. I know Henry and John trade on it and love it. So that's a couple. Other than that, I would kind of pass on all the others, honestly, because of some of the things that they will not let you do, but it's more complicated and harder to functionality to use a platform and that kind of stuff. You do have levels that specific privilege levels that you need to get. You need to have they can walk you through it. I don't know what they call it, but you need to be able to sell spreads and things like that. Nothing crazy. Dan, yes, I will go into defending positions in the class. Yes. All right, guys, I need to wrap it up here. Bill, yes, I'm on Thinkorswim, right? Yes, that's my go-to. I've been in Thinkorswim since probably near the beginning, I guess, of Thinkorswim. It was a little boutique shop way back then, but they had really cool tools and functionality and all that kind of stuff. And then TD Ameritrade bought it, and it's good. It's very solid. Got all the functionality that you need. Artly Premium is when you sell, for example, an iron condor or something like that, you're actually bringing in money. So if I sell an iron condor, I may bring in $1,000 or something on. Premium is just a credit to your account. That's all it is. again, here, think about this, or be aware of this. Anytime you're learning a new anything, sport, hobby, whatever, there's going to be language and lingo that goes along with it, you know. I got a boat, and there's all these boating terms that people are always throwing out. Yeah, it's golf. It doesn't matter. There's always going to be lingo. That's just one of the lingo. Premium equals credit equals money in your account, money coming into your account, right? That's all it means. RR, yes, on the bias. Yes, if you sign up, there is a discount for signing up for longer periods of time. Yes. All right, guys. Toshiba, I'll answer this. What do you think of IBB, Interactive Brokers, as a brokerage firm? You know, they're a huge firm, and I don't know where you're located. I know they're global, and we've actually talked to the tech guys there. Their platform is pretty good. It seems a little cumbersome to me to put some of the trades on, and we talked to them about trying to make it a little more fluid and easier to work, you know, user-friendly. At this point, it's not as easy, but I really like the fact that it's global, because we have people from all over the world, just like I can't remember your name in Australia, but but yes, it's not bad. I think Thinkorswim probably, to me, has more functionality, is easier to use, put it that way. So, all right, guys, well, let me wind it up here again. I've got the 3 choices on the screen. If you want to, you know, if you just want to take the class, that's awesome. It will help you. If you want the professional level, you get the class plus the live trading. That will really help you, because that's where we put it all together in real time, in real market, and we actually really try to make some money. The elite, if you want the class plus the live trading, plus you want me to work with you for 3 months every day in the live market, putting on trades and giving you ideas every day, you know, the idea portion of bias to me is worth, it's way too cheap in my opinion. But I don't set the prices, so they didn't ask me. So anyway, you know, again, $697, you know, that's pretty cheap. You know, well, I just know what I've paid in the past to get this kind of coaching, you know, and mentorship, and have somebody ask questions and things like that. And we've got the live trading room, and if you do bias, you know, we're in there every day, all day long. So anyway, guys, let me know. I'm glad to help you any way I can. We start the class on Saturday at lunch, 12 p.m. Central, and it's going to be fun. You will enjoy it. So we always have a lot of fun in the classes. So I appreciate the time. Glad you guys could show up, and hope this was helpful. And in whichever venture you choose, or whichever way you decide to go, and let us know if you have any questions. And I hope to see you guys on Saturday. Thanks a lot, guys. I appreciate it. Have a great night.